How to find intraday stocks. Boral's new chief executive Mark Selway is understandably positive about the company's long-term potential. But he is faced with at least another half year of heavy operating losses in the US and a commercial construction market in Australia that is going backwards. Boral has lost $195 million of operating profits over the last 2 calendar years and could conceivably extend that to $300 million by the end of this financial year. In August last year we recommended members sell half their holding in Boral after the stock had risen 35% from our original entry point of $4.05 in June 2009. Fat Profits initially recommended buying Boral around $4.05 in June. Boral reached a high of $6.40 in mid-October 2009 and has since retraced. The recent low was at $5.22 on February 1st. This represents an easing of $1.18. Our original premise for owning Boral was based on the nascent recovery in the Australian housing market accompanied by significant government spending on infrastructure projects. We expected the US housing recovery to take much longer, but Boral was in a strong position to capitalize on it when it turned. Revisiting those assumptions this week after Boral reported its half-year result for the 6 months ending December 31, 2009, we are disappointed with the rate of recovery in those key areas. Let's take a closer look at each factor. It is a well-known situation that housing starts in the US are 60% below the 50-year average of about 1.5 million new houses each year. At around 570,000 starts on an annualized basis, there is a ray of hope that the market is stabilizing. Boral currently believes that its own businesses in the US can reach break-even when housing starts are around 900,000 to 1 million on a yearly basis. There is the added problem of a significant overhang of existing housing stock. At 3.3 million units of existing dwellings according to the U.S. Census Bureau, it is approximately 1.5 million units higher than its long-run average. Until that excess supply is depleted, there will be little demand for new homes and certainly heavy pressure on the value of all housing stock. Members will not be surprised to learn that Boral's brick and tile plants are currently running at around 20% of their capacity utilization. What inventory is being produced is facing heavy competition and prices are going backwards in order to sell it. Mr. Selway expects another half year of operating losses from its business. Boral has lost $195 million of operating profits over the last 2 calendar years and could conceivably extend that to $300 million by the end of this financial year. Given that he has only been in the role for a month, it is too early to expect a decision on how to rectify this situation. Mr. Selway has also just appointed Mike Kane as president of the U.S. division, who will also need to quickly decide on a course of action.